Protecting your paycheck. I mean, it's the engine behind your entire financial life, right? But how do you actually insure it? So today, we're going to take this exact product sheet and break it all down. We're turning the confusing jargon into just a few simple choices. Let's dive in.
All right, let me start by asking you a question. When you think about all your stuff, all your financial assets, what's the single most valuable thing you own? Is it your house, your car, maybe your 401k? Seriously, just take a second to think about it.
For pretty much all of us, the answer is right here. It's your ability to earn an income. That's the engine that powers everything else. It pays for the house, the savings, your entire lifestyle. And if that engine stops, the whole financial picture can just fall apart. That's why protecting it is probably the most important financial move you can make.
Okay, so how do we actually protect it? Well, that brings us to the core choices you've got to make when you set up a policy. And don't worry, we're going to break it down into 3 simple questions: who you are, what counts as a disability, and how much coverage you can actually get.
First up, who you are. And it really all starts with your job. See, insurance companies group different jobs into what they call occupation classes, and it's all based on the risks that come with that profession. So what you do for a living directly impacts the kind of policy you can get.
Let's make this a little more real. Here are a few examples. You've got an accountant. They're in the safest category, Class 6A. Then maybe a teacher in Class 4A. And then you have someone like a carpenter whose job is way more physically demanding. They're in Class 2A.
So, why does this all matter? Well, this is where it really hits home financially. Because an accountant's job is lower risk, they can qualify for a much higher monthly benefit. We're talking up to 30 grand a month in this example. But the carpenter in that higher risk class has a lower maximum. Your profession literally defines the ceiling of your potential coverage.
Next up, what does it actually mean to be disabled? Now, this might be the most crucial part of any policy you look at. The best definition, the gold standard, is called true own occupation. And it's a really simple but incredibly powerful idea. So here's where the rubber meets the road. With true own occupation, if a surgeon injures her hand and can't operate anymore, she's considered disabled. She gets her benefit, even if she can go teach at a medical school. But with that lesser definition, any gainful occupation, the insurance company could say, hey, you're not disabled, you can still work. That little distinction, it's everything, absolutely everything.
Okay, so we know who's covered and what a disability means. Let's move on to the next key part of the puzzle, the timing. When do payments start and how long do they actually last?
The timeline's actually pretty straightforward. First, something happens. A disability occurs. Then there's a waiting period, which is called the elimination period. The best way to think of it is like a deductible, but it's for time instead of money. Once that waiting period is over, your benefit period starts, and boom, you start getting payments.
And the cool thing is, you get to call the shots on these timelines. You can choose a shorter waiting period, say 90 days, or a longer one. A longer wait usually means a lower premium, by the way. And same thing for the benefits. They can pay out for just a couple of years, or they can go all the way until you plan to retire. It's all about finding that balance between cost and the safety net you need.
All right, now for the fun part. A base policy is a fantastic start, but you can also customize it to fit your exact needs. And we do this using optional add-ons called riders.
Honestly, the easiest way to think about riders is like adding features to a new car. The basic model works, it gets you from A to B just fine, but maybe you want the heated seats or the better sound system. Riders are just like those upgrades, but for your policy, and they're designed to handle specific financial curveballs.
Let's talk about 2 of the heavy hitters, especially if you expect your income to grow over time. The cost of living rider is simple. It bumps up your benefit over time to keep up with inflation. But this second one, the guaranteed insurability rider, that's a total game changer for young professionals. It basically locks in your right to buy more coverage later as your salary goes up, and you don't have to answer any new health questions. It's how you make sure your safety net grows right alongside your career.
And I have to stop and point this one out because this comes right from our source sheet. This particular policy has something called a benefit increase rider, and it's available at no extra cost. It's an automatic way to keep your coverage growing with your income. Getting a feature like that for free, that's genuinely impressive and definitely something you want to look for.
All right, we've built the policy, we've customized it with some cool features. Let's talk about the final steps, actually applying for it, and just as important, how to save some money while you're at it.
So there are a couple of really great discounts to know about. The first one is a big one, a 20% discount if you and at least 2 of your coworkers from the same company all get policies. It's a fantastic incentive for teams at small businesses.
And if you and your spouse are both getting coverage, there's another 10% discount available for that too. It's just a simple way to make this really foundational protection that much more affordable for your family.
Now, what about the application itself? A lot of people think it's this huge, painful process, but check this out. It can be way simpler than you think. For a whole lot of people, especially if you're under 50 and looking for a solid benefit amount, you can get coverage without a medical exam and without digging up piles of financial paperwork.
So let's zoom out and put all these different pieces together. We've just taken up what looks like a really dense document, and we've broken it down into a clear set of decisions that help you build your own personal income safety net.
Remember this sheet? It might have looked a little intimidating at the start, but now you can actually see all the elements we just walked through. There's the occupation classes, the definitions of disability, the benefit periods, the riders. You are now equipped to know exactly what you're looking at.
And that really brings us to the final thought I want to leave you with. Your income. It's the foundation that holds up everything else in your life. So the crucial question you have to ask yourself is this: what's supporting your income?